Good morning, everybody, and welcome to Expana's Tuesday morning market roundup. Today is July 30th, and we hope you have a great day so far. We're going to kick things off with Todd, who has an update on the boxed beef market, specifically within the middle meat category. Good morning, Todd.
Good morning, Courtney. Good morning, everybody. Yeah, so we're just going to run through some of the price action that's happened here post 4th of July. We're about, a full month after this holiday, if you will, and there's been some volatility that's really ramped up. So we're going to start with the bone-in rib choice or export rib, if you will. And as you can see, we're sitting about 16% down from our June peak of nearly 9.35 a pound. And, this is about 9% shorter than last year's rally, which we saw peak around 10.60 a pound. If we look into boneless ribs, you can see a similar trend that has unfolded where they're down 14% from a peak of 1075, and they're actually, as of this week, they're sitting about 7% below year ago levels for the same time period. And I think this largely speaks to the cautiousness that we've seen this year. Retailers have been hesitant to put middle meats on the feature this year just because of the price points that they've had to work with through this year so far. If we move down to the loin, which the seasonal, correction, if you will, has been much more aggressive and much more violent. As you can see, the short loin, it followed last year's pattern fairly consistently. It's down roughly 20% from its June highs, and it's trading just about in line with year ago levels. But as you can see, last year we really didn't catch any amount of support all the way into September, and even there, it was rather dull going into the Christmas holiday. Now, this isn't really a Christmas focused item, if you will. That would really go back to the rib, the bone-in rib, and even we saw a little bit of a transition last year where there was more of a focus on the strip roast. And this is our truckload quote. We're going to open up our LTL just to give you a little more because there was a lot of hand-to-mouth buying this year. So the truckload quantities weren't necessarily moving as robustly as we've seen historically. So the LTL and the hand-to-mouth purchasing really prompted LTL quotes to get away from the truckload quotes quite a bit. But as you can see, our rise higher was fairly seasonal and much more tame compared to the volatility that we saw last year, where prices were largely suppressed until we really got into that 4th of July period and Father's Day period where demand truly kicked in. Now, as you can see, we peaked out at around $11 a pound, sitting at $8.56 a pound today, down nearly 22% from that peak. And if you look at the seasonality of last year's trend, there could still be quite some air here between now and the cooler fall months. And the final item that I really want to touch on, because it has bucked a lot of seasonal trends, if you will. And once again, this speaks to the environment that we're in of hand-to-mouth purchasing, cautious around expensive middle meat items, and that's the tenderloin. Typically the darling of the beef complex. It's traded below year ago levels consistently all season and just hasn't been able to break through 23 levels at all. It's down year to date 25%. Hasn't seen an ounce of positive returns yet this year. Now, granted, we did come in at some of the loftiest levels that we've seen on record this year, but we are now approaching 2022 levels, and it still looks like the market is adequately supplied with this item for right now, and we typically don't see interest really pick up until we get into mid-September, if you will. So there's a lot of caution out in the market. This item continues to be kept at an arm's length on the buy side. So we'll see, whether or not we can catch some support here sooner than later, or if these expensive middle meats are going to continue to be shunned for the remainder of the year until we get a little bit closer to that holiday Christmas buying period.
Thanks for those updates, Todd. Always appreciate your insights. Next up, we have Matt, who has some updates on last week's cold storage report.
Thanks, Courtney. Good morning, everyone. Yeah, so we're going to talk chicken. We're going to talk cold storage here today, and kind of just give a little bit of a mile high view of what the chicken complex has kind of been going through. It really does speak overall to what industry participants have been saying for quite some time. You can see here the pretty dramatic red downward movement in almost all cold storage stocks, at least year over year. And then the two that are really highlighting, which are helping to drive this whole thing, are breast meat and wings. Diving in a little bit deeper on breast meat, you can see here just from a 5-year view, it's not a historically low number of product in the freezer, but it is lower than last year, which was at a pretty historically elevated peak. And it just speaks to the movement on fresh, where these processors have not felt like they have needed to put anything in the freezer because the movement on fresh has been so robust. We're also hearing that there has been a little bit of interest in breast meat moving into the export channels. So if it does make its way to the freezer, we've been hearing players have been kind of saying, hey, we're able to move that into other channels, Asia specifically, Puerto Rico, to kind of be absorbed in that arena. And it's been at a relatively attractive price point for buyer and seller. Wings, we've talked about wings ad nauseum here for the last 6-8 months. Downward price correction happening right now, but that hasn't really done anything for freezer stocks, at least for what we're looking at in June. You can see here well below years prior. The only year that it's higher than is 2021, which is no surprise given where we were at from a supply standpoint there. And here we are. We're getting into almost peak demand season coming up with NFL coming back, college football coming back in just a few weeks. Training camp has already begun. Go Giants! And there is some fresh pressure happening, but frozen, we're hearing people start to buy, and when they look at the inventory levels, they're not seeing a ton available. So that has some participants, even though we're seeing that sharp price correction on the fresh side, has some participants kind of thinking to themselves, hey, maybe this thing will springboard back. Other people not so optimistic. They're saying, hey, that price level was really elevated when that fall started, and it might have killed demand for us like it had in the past. But where the freezer stocks are now, there is an underlying bit of optimism on the part of the seller because they don't have a lot to fall back on, and there are a lot of buyers that come into play in the coming weeks to fill up their inventory for that demand period for NFL and college football, which is starting very soon. So that's really it on chicken, but it is quite an interesting story here for at least what cold storage tells us.
Go Giants. Thank you so much, Matt. And that wraps it up for today's Tuesday morning market roundup video. Thank you to our participants and thank you to our viewers for joining us. We look forward to seeing you next week.